So today I'm going to be talking about unlocking cash with the R&D tax incentive and government grants. So basically, sorry, I'm just going to fix up my screen. Here we go. Okay. Yep. So sorry. So basically, we're talking briefly on the government grants and R&D incentives that provide companies with much needed funding to encourage companies to continue to grow and innovate. I can't get into too much detail in the 10 minutes, so I'm going to focus specifically on the R&D tax incentive. But there are a raft of project-based grants to help companies to research, develop, commercialize new products, processes, and services. And this diagram sort of illustrates a selection of them. There are many, obviously not listed here, some of which are specific to different industries, such as manufacturing, clean tech, energy, medical research, etc. But this slide provides you some website links to places where you can sort of search for suitable grants. Each state will have its own website for grants, but above I've included some examples for Victoria. It's worth noting that many of the grants on offer sort of change regularly, so it's worth sort of checking in with these websites, or signing up to some alerts, to stay on top of any sort of new grants so you don't miss out on any specific opportunities. Okay, so the purpose of the R&D tax incentive is to boost and promote, technically risky R&D and innovation in Australia to ultimately benefit the Australian economy. It's open up to, some foreign companies as well who wish to come and set up and conduct R&D in Australia too. Generally, only companies can apply, with the exception of public trading trusts or permanent establishments of foreign companies. And it's not limited to companies of any particular industry. So any company that undertakes eligible R&D, whether it's in manufacturing, life sciences, technology and ICT, mining, clean tech, automotive, construction, whatever it is, can apply. It's not competitive like a government grant. So if the company self-assesses and if it's undertaking eligible R&D, then it's entitled to make a claim. And I'll discuss the process of how a claim is made on the next slide. The program allows companies to claim back a portion of their R&D expenditure. So if a company's aggregated turnover is below $20 million, it can receive a refund of up to 43.5% of eligible R&D expenditure back. Or in some instances, when the company is in a tax payable position, and they basically can obtain a tax offset of that amount. The refund can be potentially up to 48.5% in rarer circumstances for companies with an aggregated turnover of below $20 million that can access the 30% tax rate. For larger companies that have an aggregated turnover of above $20 million, the benefit is in the form of a tax offset, so they won't be eligible to get a refund. And the amount depends on the financial year in question and potentially the company's R&D intensity, as the rules have recently changed as of 1 July 2021. But basically, the net after-tax cash benefit ranges from about 8.5% through to 16.5% on top of the regular income tax rate that the company can access. It's also worth noting here that there are some R&D financiers out there that can provide companies with a cash advance on the back of the R&D tax incentive claim to assist them with cash flow during the year as they're spending money on the R&D activities, rather than to wait till the end of the year to lodge an R&D claim then. So that's another option for funding just to be aware of. The R&D tax incentive applies to both supporting also core R&D activities and supporting R&D activities. So core R&D activities are basically the experimental activities, and I'm going to go into them in a bit more detail over the next few slides. But supporting R&D activities are also important and can be claimed, and they're basically activities that are directly related to the core R&D activities. So they're activities that are not part of the experimentation, but they're essential for experimentation to take place and include things like, project management, procurement, undertaking routine testing and analyses, activities involving the preparation of experiments and that sort of thing. So expenditure that can be claimed under the R&D tax incentive include salaries and on costs like bonuses paid, superannuation, payroll tax, that sort of thing. Any contractor costs, a portion of relevant overheads, and any direct expenditure on those activities such as specific tooling, materials and consumables, any travel that needs to be done, for example, can be claimed. Depreciation of assets capitalised for tax for the period of time that they're used in R&D activity can also be claimed. Just one thing to note as well is that any overseas R&D activities, so if a person is physically located overseas, you need to obtain a pre-approval from AusIndustry before you can claim those expenses. So that requires a separate application process, which we won't have time to talk about today. Okay, so to claim R&D, the process is and that's assuming that the company has already been established, and if not, then the company needs to be set up in the first instance, is firstly to set up the financials and ensure that you keep records. Someone's getting a phone call. So making sure that you keep records on hand as to how you to substantiate your R&D expenditure, including timesheets, for example, for time spent on R&D activities. Undertake R&D activities and keep contemporaneous documentation with regards to those activities, and where you need to spend at least a minimum of $20,000 to be able to claim the R&D tax incentive. Step 3 is to lodge an application to register the R&D activities with AusIndustry, and you have 10 months after financial year end to register those activities. So for the year ended 31 June 2021, you'd need to basically register the activities by 30th of April of 2022. So AusIndustry, once they receive your registration, they issue you with a registration number. And then you basically claim the R&D expenditure by preparing the R&D tax incentive schedule, which contains information on the R&D expenditure and the registration number that AusIndustry provide you. And that gets lodged with the income tax return. So that goes to the ATO. So it's like a two-step process. So you don't basically get your refund until the income tax return is processed. So that can take, sometimes 6 to 8 weeks until that happens. So how does the tax law define a core R&D activity? Well, I'll use this example of a single serve wine glass sort of to explain it. So basically you need to understand, one, was an experimental process employed? So what is important with determining eligibility for R&D is the process that's undertaken to develop the product or service or whatever it is. So did experimentation take place that was based on principles of established science, such as, chemistry, biology, physics, that sort of thing, that basically led from hypothesis to experimentation, were results then from the observations used to form logical conclusions. So did you follow, that scientific procedure? So it's clicking to the next slide. So 2, whether the outcomes of the experimental activities were unknown in advance based on existing knowledge. So there must be, technical uncertainties present that can't be resolved through experimentation. They can only be resolved by undertaking experimentation, I should say. So in the case of the wine glasses here, so one unknown was whether the wine could be poured into the glass with the purposely designed nozzle and bellow to ensure basically that the dissolved oxygen in the wine and the oxygen in the headspace above the wine was less than a certain amount, as excess oxygen can cause spoilage. So that took quite a bit of R&D to develop. The next question is whether the purpose of the experiment was to generate new knowledge. If you are using existing knowledge, then that's unlikely, sort of existing knowledge to solve, those technical uncertainties, then that's unlikely to qualify as an R&D activity. Here it's important to note that even though another company may have already sort of developed a specific product like a single-serve wine glass, you can still claim R&D on the development of a similar product if you don't have access to that knowledge or IP, because it might be proprietary information that's not out there in the public domain. So it's not readily attainable. And therefore you still may undertake eligible experimentation to develop that product if you go through those steps of the experimental process where you're solving technical uncertainties. And lastly, you need to basically have good, adequate supporting documentation. So it's really, really imperative that you do keep on file documentation to substantiate all the R&D that you do. And these can include things like trial reports, search engine screenshots, meeting minutes, logbooks, receipts, timesheets, and that sort of thing. And just to finish up, if you're considering applying for some of the grants I mentioned earlier, there's a number of things you can be doing to prepare, as many of them have similar requirements, such as keeping on hand a good pitch deck, a good business plan that describes your project, including a risk matrix, a budget showing how you expect to use up the grant, how you expect to allocate the grant money, a Gantt chart or project timeline showing timing of sort of key milestones, evidence of support from the founders or the board or CEO, and evidence to support to show that you can basically meet your portion of the project costs, as usually grants fund only a certain percentage of the costs. So you can show that support through loan agreements, an accountant's declaration, funding strategy documents, or letters of commitment from various contributors. So it's handy to have them all prepared so that when a grant funding round does open, you can basically concentrate on drafting the application and responding to the grant questions rather than flapping around trying to pull together all the supporting documentation at the last minute, which can take considerable time and effort. That's basically it on R&D and tax incentives and grants today. Does anyone have any questions?
Thank you very much for a great presentation, Rita. Any questions from the audience?
That's good. It looks like I answered everyone's questions.
A quick question from me. Do you need to be at a certain stage in your company to be able to apply for these grants?
No, not necessarily. So some grants are applicable from startup all the way through to being a mature company. So you just need to be able to show that you do require the grant funding. Because if you have sufficient money in your bank accounts and you don't really need the grant funding, then you're not going to get it. So you just need to be able to show that you've attempted to get money, but you haven't been successful, and the grant funding will help your project advance.
Thank you.
I have a question too.
Hello.
Hello, this is Dorian. I have a question too.
Go ahead.
If there is an international company which would like to come to Australia, does this company receive any incentive for R&D or not?
Yes, so basically the company would need to come and set up an operation in Australia. So it has to set up a Australian contractor or subsidiary of some sort, and that company has to then basically contract with the other R&D entities if it wants to claim R&D in Australia. And there's a specific way to structure so that you can claim Australian-owned R&D where the IP is held here and the Australian entity is undertaking R&D for itself, or you can claim foreign-owned R&D where the IP can be held offshore and can be funded by the overseas parent, but then the benefits are sort of reduced if you go down the foreign-owned R&D route because of transfer pricing that comes into play as well. So structuring is real. Getting the structuring right is really important, and that's something that we do. We do help companies come and set up in Australia to undertake R&D here and to access the R&D tax incentive.
Okay, thank you. Thank
Welcome. So basically, Australian-owned R&D will obtain the highest level of benefits available. So they can potentially access the 43.5% R&D rate. So when I say it's Australian-owned R&D, that also means that the overseas parent might hold the IP, but the Australian entity has rights to exploit that IP. So that's okay as well.
Yes, thank you very much. I understand. Thank you.
Welcome.
I think there was one more question.
Yeah, for a small company, do we have to seek expert advice from company or accountants or whoever advises got the experience? Is it the best way?
Yeah, look, you don't have to, but the R&D tax law is quite complicated, and there's lots of nuances with respect to how it's applied. So it's always best to have an R&D consultant check an R&D claim that you do want to make, even if you don't want to use an R&D consultant to prepare the whole claim. I think it's worthwhile just to have somebody check over it, because a lot of companies don't understand the tax law, and specifically if you get into the software space, it's so rare that I see anything prepared correctly. So just something to be aware of.
Right. Thank you.
Okay.
Thank you very much for a great presentation, Rita.